summary for the commodities markets, the top trades of the week. We'll look at live market commentary and technical analysis. We'll also cover the week ahead, so the key events looking forward, and of course we'll be answering any questions you may have too. Okay, so gold price this week. So gold has posted its longest rally in 2 months on safe haven demand. This week, gold posted its longest rally since August as weaker global economies and slumping US equities revived demand for the precious metal as a safe haven asset. On Wednesday, gold price hit a monthly high of $1,249 an ounce to rebound from last week's low of $1,182 an ounce. So that's an impressive gain of 5.4% or 670-point profit in less than 1 week. Gold prices received a boost amid lingering concerns about global economy growth, particularly in the EU, combined with weaker US dollar. On Thursday, the St. Louis Federal Reserve President James Bullard suggested that the central bank should consider delaying its quantitative easing program as inflation expectations have fallen. The Fed is expected to close its asset purchasing program this month and hike interest rates in 2015. In the energy markets, crude oil prices finally rebounded from 4-year lows. On Friday morning, WTI prices added 0.29% to trade near $82 a barrel mark, whilst Brent gained 0.11% to trade near $86 a barrel. And elsewhere in the soft commodities, they've continued to outperform this week. So on Thursday, wheat surged 2.5% to trade at $521 a bushel, its highest price since September the 11th. And corn soared at $3.57 a bushel to hit 1-month high, pushing up October gains to 11% for the month, whilst coffee rose 1.7% to hit $221.90 a pound this week. The contract is currently at its highest level since January 2012. So before we go into the technicals and the top trades of the week, I'm Phil Carr, professional trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world. So gold, silver, oil, natural gas, the agricultural commodities. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio. And I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Kalsi, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, spent several years coaching professional fund managers and traders internationally for some of the world's top tier hedge funds and investment banks. And through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications. We've appeared frequently on financial televisions. That's just a bit of background on the Gold and Silver Club. So we'll take a look at the gold price at the moment. We're currently trading at $1,237 per ounce. Take a look at that on the technicals very shortly. First of all, we'll have a look at the top trades of the week using the Gold and Silver Club signature trading strategies. So first of all, we've had some lovely sell opportunities this week on crude oil. So this was a position that we took midweek on Brent crude oil. This was for a risk of 130 points. So each lot traded $1,300 risk for a profit of 265 points or $2,650 profit for a lovely 2-to-1 as we broke down on Brent. And WTI as well, we had a sell position on here catching a 380 point move. So the risk on the trade was 160 points. $1,600 for each lot traded for a profit of $3,800 for a 2-to-1. We've also had a lovely sell short opportunity this week on the palladium market. So the risk on the trade, 170 points. So $1,700 risk for 340 points or $3,400 profit for a 2-to-1 on palladium. Okay, so what we'll do now, we'll move over to the technicals, and we'll take a look at how the markets are shaping up today. So first of all, we'll start off and we'll have a look at the energies here. So if we just start off with the light sweet crude oil market, you'll note that we have broken through a major trend channel over, which has been in place really going all the way back to 2010. We've broken down quite significantly over the last couple of weeks here. You can see how the momentum has really picked up over this week especially. Now we are getting a bit of a retracement this morning. We can see a little bit of a bounce happening here. If we just go out to the higher time frames, we can see where we're getting a retracement just on the weekly here as well. And if we go and have a look at the daily, what we could expect at the moment is we've got a sell zone, very clear sell zone at the moment that we'd be interested in adding on additional positions. And it's essentially at this resistance channel here. So what we're seeing at the moment, we are seeing a retracement. There's been quite a significant sell-off. So obviously some traders are going to be taking profits around these levels, and other traders looking to get in on the short-term retracement that we're getting after the market sold off significantly. But I do think we're going to come into some resistance around the current levels. So we've got resistance here around 84.25 at the moment for light sweet crude oil, and just above here as well, I've got some swing highs here around the 84 and 85 levels. So this whole zone we will be looking at for resistance, and potentially looking now for sell short opportunities just to continue within the overall trends. That's what we're seeing on light sweet crude oil. Very similar picture actually on the Brent crude oil market as well. So we've had a continuation of downside here as well. We'll just actually update this and we'll have a look at the contract as it's been updated here. So you can see again we had a significant sell-off. We've been a very strong downward trending channel on Brent crude oil. We've finally broken down here to major support zone around the 82 level. We found a retracement, and again we've got a resistance channel here where the market has just come up to. So we can see here clear resistance around 87.50. So again, what we're looking at here, we're not looking to try and get in at the bottom of a market here. We're looking to get a continuation. The trend is of course your friend here. We want to just take advantage of rotations up to this zone here in order to just continue and sell off again. So we'll be looking to position ourselves for additional sell shorts in both WTI and Brent crude oil once we get confirmation. Natural gas, also very interesting. So if we go out to natural gas on the higher time frames again, you'll see that the natural gas market currently, it is starting to break through this major trend line going back to 2012. We can see here how the market is looking just on the higher time frame. Nice inverse hammer developing. We're looking to come down and take out this support zone now. So we've had a strong trend line which has now been taken out. The next key level of support, 3.726. This is a swing high going back to 2011, 2012. This is an important level, and if we can break down from this level here, we'll be looking for certainly more downside as we go into next week. So that's a key level for you, 3.726 to break down here on natural gas. You can see the higher time frames. If we get a breakdown of that level, we'll get a similar move to what we've seen on oil. So for me, natural gas, definitely one you want to watch. Also, having a look at the copper market. Copper looking quite interesting, just continuing to stay within a very similar channel. If we go out to the higher time frames, of course, got a very strong downward trending channel going back to 2010. Similar to the copper market, you can see on the weekly also how strong this channel is. And if we just go out to slightly tighter time frames, we've got a bit of a hammer forming at the lower end of the trend line. So we may get again a rotation back up to the upper end of this channel again. So you can see a little hammer forming right at the lower end of the trend channel. So there may be an opportunity for a quick counter trend day trade here next week to take it back up to resistance again. So copper, definitely want to watch. Great day trading market, copper. So do keep an eye on that. Looking at the gold market, so gold has a very key resistance zone to break above now. 1250 is the next key zone for us to break above here. So that's what we're looking at the moment on gold. We're continuing to build a little bit of a base here. You can see that. So we'll probably still continue to ricochet. We're looking for buy zones around the 1230 zone on rejections, or we're looking for a breakout above 1250 here at the moment. So the scenarios we look at either a pullback and then we can buy and take this to the upside, or we'll just wait for a breakout at 1250. At the moment, we're just looking at upside at the moment for gold. And if it does break down below the 1200 level, then there'll be opportunities to again sell short. But in the short term, gold is doing quite well, and it just needs to break through that 1250 zone. Looking at palladium, so palladium did sell off quite significantly over the last couple of days, which we've caught nice sell shorts on that. We've got a bit of a retracement happening today. Overall, strong downward trend at the moment on the shorter term over the last couple of months. So you could just look at more additional opportunities to get in this for a sell. This trade, we've already out of this trade now. We banked our profit, so waiting for the next setup. We'll move on also. We'll take a look at silver here as well. So silver, very similar situation to gold, just building a little bit of a base here, bottomed out at 1666 in the short term, needs to really get above this key zone here. I'd say the $18 an ounce zone is where silver needs to break above to really pick up some momentum. That was the key level that got broken down. 1826 actually was the key support, the 4-year support, which got broken recently. And that if we can get back above that zone, then we could start to see some buying pressure and a good base starting to form here in the shorter term for silver. A failed move above that level, and we could just certainly see more downside, and we look to take out 1666. If we move over to the softs here as well, the softs having a great week. So the corn market looking really good here. We've had some good buying opportunities over this week. We've got some resistance to come yet around the 360 level to the upside, but it's had a good week and certainly a good couple of weeks actually, as we bottomed out around the 320 zone, and you can see very clear, nice trend channel building on the corn and the wheat market actually as well. So we've had some nice breakout opportunities and nice buying opportunities around these zones. Also on the wheat market, wheat finally broke out as well. So we'll just have a look at the key zones we've come up. Okay, so the key zones which you can see the market finding some resistance at the moment is just around this 520 level. So the 520 level providing some resistance. We did get a breakout this week above 508.50. So you can see on the 10th of October, this is where we've had the breakout. 520 at the moment. This is the next key level for the wheat market to break out from. If we can get a sustained break above this level, we could really start to shoot up to the major resistance just above here, which is around the 572 zone. So for me, wheat and corn are definitely markets to be keeping an eye on as we go into next week as well. If we look at the coffee market, coffee's had a really good run recently on the drier than expected weather in Brazil, which have affected the crops out there. Now you can see we've had a little bit of a pullback. We've had an extreme move. Coffee, one of the best performing commodities in 2014, but we've had an extreme move over the last 2 to 3 weeks here to the upside. We broke out to 2-year highs at 225, getting a bit of a pullback at the moment. I think we for the time being, we're just staying congested between the previous resistance. Looks like it's becoming support now. So this was the resistance. This is potentially a new support at 211. So we'll be looking for opportunities to get back into this. So we'll see if we get a buy signal around this zone to take coffee really up to high prices and for a breakout above 225. So there's definitely lots to be looking at the moment. There's exciting times in commodities right now. I've had some fantastic opportunities on oil this week. Natural gas, I think, is going to be a really good one for you to watch next week. Copper as well. You can see we've got a nice trend line here, so that's definitely one to watch. Gold as well, looking really interesting around this resistance zone, and also the softs as well. So, you know, never a dull moment in commodities. So we'll move over and we'll have a look at the key news announcements as we go into next week now, which will affect the commodities. Okay. So those are as follows. So the week ahead key events looking forward, we've got Tuesday, the 21st of October at 3 p.m. BST, 10 a.m. Eastern time. We have the US existing home sales. Existing home sales measures the change in the annualized number of existing residential buildings that were sold during the previous month. That report helps to gauge the strength of the US housing market. It's a key indicator of overall economic strength. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. Then on Wednesday, the 22nd of October at 1:30 p.m. BST, 8:30 a.m. Eastern time, we have the core CPI, so the core consumer price index. CPI measures the change in the price of goods and services, excluding food and energy. The CPI measures price change from the perspective of the consumer. It is a key way to measure changes in purchasing trends and inflation. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. Then, of course, Wednesday, the 22nd of October at 3:30 p.m. BST, 10:30 a.m. Eastern Time, we have the US crude oil inventories. That data reports the number of barrels of crude oil commercial firms have in their inventory. Commercial firms report those levels to the Energy Information Administration on a weekly basis. A higher than expected reading should be taken as for bearish for crude oil prices, and a lower than expected reading should be taken as bullish. Then as we go into the latter part of next week, on Thursday, the 23rd of October at 1:30 p.m. BST, 8:30 a.m. Eastern Time, we have the US initial jobless claims. That data measures the number of individuals who filed for unemployment insurance for the first time during the past week. It is the earliest US economic data. Week-to-week numbers can be volatile. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. Then we have Thursday, the 23rd of October at 2:45 p.m. BST and 9:45 a.m. EST. We have the US manufacturing PMI. So the Manufacturing Purchases Managers Index PMI measures the activity level of purchasing managers in the manufacturing sector. A reading above 50 indicates expansion in the sector, whilst a reading below 50 indicates contraction. So a higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. And then Thursday, the 23rd of October at 3:30 p.m. BST, 10:30 a.m. Eastern Time, we have the US Natural Gas Storage Report. The Energy Information Administration, the EIA Natural Gas Report, measures the change in the number of cubic feet of natural gas held in underground storage during the past week. So a higher than expected reading should be taken as bearish on natural gas prices, while a lower than expected reading should be taken as bullish. Okay, so those are the major announcements you certainly need to note for commodities next week, particularly the also for the energies. The storage announcements are very important for your day trades on oil and natural gas. So, of course, if you'd like to take your trading to the next level and learn to trade commodities with the Gold and Silver Club, courses are available at our international training centres and online. You can find out more. You can request information on the Gold and Silver Club coaching programs or live trading room. Just go to www.jointhegoldensilverclub.com. You can also contact our London, our New York, our Sydney, our Johannesburg, or Budapest office. What I'll do, I'll leave the numbers on the screen for you very shortly so you can refer to those. Also, make sure you subscribe to our newsletter. Okay, so you'll receive a free weekly report on the precious metals, energies and agriculture, live market analysis and prices. So you just need to go to www.thegoldensilverclub.com to receive that. Okay, great. So I'll leave these details on the screen for you. So there's plenty for us to look at today and as we go into next week. So I wish you all good luck with your trades. Have a great weekend, and we'll see you on the next one. Okay, and for those of you who do get in touch, we'll see you on the inside. Okay, thanks everyone. We'll see you on the next one. Cheers. Bye-bye.